How many times have you seen this structure? The market creates a low and then a high, and you're advised to wait for a pullback to enter. But let's be honest, we've all entered trades at what seemed like the perfect entry price, only to watch the market stop us out. Today, we're providing a solution for traders looking to perfectly time their entries between these ranges. This indicator doesn't just detect ranges, it clearly plots entry points, take profit, and stop loss levels for you, all in real time. And the best part? We're giving it away completely free. So, if you want access to this indicator, stick around. We'll show you exactly how it works and how you can get your hands on it. Let's dive in. First, let's clarify what defines a range, as traders often confuse ranges with consolidation. A range is defined by two significant swing points, a high and a low. As long as the price stays between these points without breaking either, the market remains within that range. Consolidation, however, typically occurs after forming higher lows or lower highs within the range, indicating that the market is struggling to break out and losing momentum. This indicator specifically targets ranges, not consolidation patterns. When using the indicator, you'll notice clear red and green lines on your chart. These lines indicate the high, low, and midpoint of the detected range. The midpoint is critical. This is the level we use to trigger our trades. If the automatically detected ranges don't match your preferences, you can easily customize them. Simply head into the settings and adjust the pivot length. Default is 20. This setting determines that a valid swing high or low must have at least 20 candles on either side that are lower for highs or higher for lows. Once a range is established, the indicator waits patiently for the price to revisit the dashed midpoint line. When it does, that's your trade trigger. A quick note, sometimes multiple ranges can appear on your chart, which may clutter your view. To address this, we've added a threshold setting that filters out less significant ranges, ensuring your chart remains clear and easy to analyze. Also worth noting, if you see ranges but not trades, it's likely because your take profit and stop loss levels have overlapped. You can enable overlap trades in the settings, which is off by default, to visualize these potential setups. The green area on your chart represents your take profit, while the red area indicates your stop loss. These levels are dynamic, calculated using the average true range to adapt to market volatility. This ensures your trade levels remain realistic, sometimes wider or tighter depending on current market conditions. And you'll also notice that it does not matter if price breaks outside of the range before retracing to the 50% point, effectively allowing you to also capture entries based on the pullback of false breakouts. Now, while this indicator can detect trade setups based on this structure, as usual, as we would advise, never rely on indicators blindly, and always combine them with your analysis to get the most out of them. So, here are two examples of how you can use this indicator to get the most out of it. In this example, we can see the market was trending higher before forming a clear range, high and low, which has since turned into a consolidation zone. By marking those levels, it's easy to spot what looks like a classic breakout. But then, price snaps right back into the range. Now, instead of guessing where to re-enter, we enable our indicator. And instantly it detects the exact same range. From there, we simply wait for price to pull back to the 50% midpoint, which becomes our precise trade entry. Normally, you might set your stop loss at the candle low or just beneath the range, but the indicator has detected increased volatility and instead automatically places the stop loss well below the range, using ATR-based logic. And check this out. Price does retrace back to the low. If you had placed a traditional stop loss, you'd be stopped out. But thanks to the dynamic ATR calculation, the trade stays alive, and our take profit still offers a 1-to-2 risk-to-reward setup. Here's another example. This time, we're combining the range indicator with the reversal zones from the Signals and Overlays toolkit. In this example, we can see new lows being created, and the upper reversal zones aren't even getting tested. A strong sign we're now trending downward. Now the market bounces perfectly from the lower reversal zone and pulls back to the 50% midpoint. And that becomes our ideal entry. From there, you can use either the ATR-based take profit levels from the indicator or the lower reversal zone lows as your profit targets. Thanks for watching. Don't forget to subscribe our YouTube channel and join Telegram.